All right, traders, this is Christian from Tribeca Trade Group, and this is your end of day market recap for Thursday, May 19th. Risk disclaimer in front of you. Everything that we're going through is for information purposes only. Please read the whole risk disclaimer here. So, theme of the day, which is kind of a little bit depressing, but just kind of it is what it is, and I'll explain in regards to, is this, we heard for a while the last couple of years, you heard the term, or you may have heard the term, rolling bull market. This kind of feels like a rolling bear market in the sense that we're just seeing different groups kind of get hit every day, right? There's like another, it seems like there's another victim in terms of either groups or sectors, but it wasn't all bad today. You could see there's a lot more areas that I highlighted on the left over here in sectors in terms of green. These are, this column, of course, is percentage change from the open, meaning what names or what areas actually rallied from the open, and you can see you got quite a few in here. But however, it's kind of weird. It just didn't translate to any, major moves. When you look at some of these groups, I guess, there's a couple that are similar. Solar, clean energy, they continue to act very well. They did as well yesterday. And a couple areas, like what did the ARK fund do today? The ARK ETF was up 4.5% today. So, I mean, that's very different. The thing that was kind of interesting about that group and some of the higher momentum areas of the market yesterday, they really weren't under pressure. The example that I was talking about yesterday in the trading room, and it worked, and it held up pretty well today, was Shopify, right? Clearly so many retail names got hit. Now, of course, Shopify is a little bit different. They're not a retailer, but they do online technology advertising, and they just really kind of flatlined yesterday. Where the overall market was very weak, it held in very well, and today it was up at one point like over 10% and finished up 8%. Now this thing is a mess when you look at the daily chart, right? This is not something like, oh, that's relative strength. It's relative strength just for one day. So the chart still looks very challenged. I would watch 439 in this name. From time to time, I get the question about like, oh, is the bottom in this name? Really, you won't know that until kind of, the name starts to turn up a little bit. But I really watch the 50-day moving average, right? That tells me, because sometimes, there could be a couple different scenarios that play out from a name that had a big decline. It's either going to base for a long time, and I think if you look at the energy chart, right, from what happened, back a couple years ago, right, you can kind of see, right, big decline, right, and then retaking of the 200-day moving average, right. So that's the first thing that has to happen, and then it's usually kind of this back and forth price action before it really starts to take off. Now again, this looks pretty good, but you could go back and you could look at previous bear markets. That's the best thing that you can really do if you're not sure how a stock bottoms, or how an area of the market that you're looking at, if you want to see or if you want to get the feel of how a name like starts to turn up and go higher, I would watch, take a look at what happened back in 2000. You can find the history of these charts on stock charts, or a lot of free chart applications. You can go back, right? You just have to kind of put in the time and look and study a little bit. But look at what happened in 2008, 2009. Right. So one of the things that I keep coming back to, and I'll go back to the Shopify chart, is, for me, I've got to see these things get at least back above the 50-day moving average. Then even it's still in a downtrend, for my definition of a downtrend is below the 200-day moving average, which again, you feel like, oh, geez, that's all the way up here, right? 1100. And by the time, if you're looking for a move to get above the 200-day moving average, you miss all of this. Well, typically what happens is it's going to spend a lot of time basing so that the 200-day moving average will actually come down to the price action. So that usually means that a lot of time goes by before a name bottoms. So that's why, a couple points to extract from that is you don't have to be in a rush. You also, if you are familiar with any type of trend following, right, the object is not to pick the bottom, right, or to try to do that. It's to basically find when a name, in any trend is not to pick the bottom or the top, it's to capture the middle, right? So again, a phrase that comes to mind all the time, and when I talk about that is it's better to be a little bit late than correct than early and wrong, right? So I'll get back on track a second, but again, like we know how long these Chinese internet names have been in downtrends, right? This has been going on, this is at 104. The Chinese internet ETF is down to 27. You're probably thinking like, hey, this thing could bottom, right? It looked like a bottom and that it could be basing in here, right? And then it took another leg lower, right? So, number one, if you were playing that, right, the 50-day moving average is great for that, right? You could have waited to the 50-day moving average basically, back in here where you got above, and then you use the 50-day moving average as your stop, right? Because this was at 48 and it's back to 27. So again, I'm watching this thing. It's very close to the, getting back to the 50-day moving average. You could also see the 200-day moving average. Maybe it's starting to go sideways a little bit. But again, I wouldn't be surprised if this chops around back and forth and goes sideways before it starts to really turn back up. But I'll watch, and I'm happy to take a position versus the 50-day moving average. But it's not there, and I don't need to be early. Right? I know everybody does like to be early on Twitter because then they can do their victory laps and all that. But then when the name goes back, when it falls back, then I don't hear anything. I hear crickets. Usually when that happens. So let me get back to on point here because I, of course, went off on a little bit of a tangent today. But yes, there were some things that were acting well, but you have to ask yourself, right? Are these things, and let's look at next, let's look at the ARK ETF, right? It could just be that these are just oversold bounces, right? And that finally, there's also options expiration tomorrow too. So there might be a little bit of short covering into that, but these things are so damaged technically that, they're so far below the 20-day moving average and the 50-day moving average that these things are due for a bounce. Clearly we saw this back in here, right? We saw a move from 51 and a fight ensued with the 50-day moving average here right around 65. Now this is all the way down to 43. So again, nice little counter trend bounce rally, and I wouldn't be surprised if we continue to move up a little bit further in some of these areas of the market. So let me explain a little bit. So the price action today, we haven't talked about the indices. Let me spend 2 minutes here. I think you've got, fairly easy levels to watch. So we're hanging on by a thread here, by the way, right? For the overall market, right? The S&P, this is not a good look. The fact that we were down like 4% yesterday, and we're down another 70 basis points. So there's no fight in this market right now. It is a big tug of war that continues to happen with buyers and sellers, and the sellers are just bigger right now. Anytime we tend to kind of, try to break a little bit higher, it's like pulling teeth, right? And sellers just come in and just push this thing down, right? Then, finally, after like 7 or 8 bars, consecutive red bars, you get one green bar, and then it gets rejected again. So, this is just, again, one day. I don't know what tomorrow is going to happen, but just like yesterday, the sellers are in control. Normally after a move like that yesterday, you would have bargain hunters kind of come in a little bit. We're just not seeing that, right? We're back to this 5-minute VPOC got taken out, right? I mentioned that this might be sticky. We're kind of right back to where that is. Also, another thing too is we've seen this a couple times now. Take a look at where we opened versus where we closed, right? It's exactly the same. It's almost exactly the same price. right? And that means when we have a move like this, that it's kind of an inside day. It's not perfectly an inside day, but the trend is down, and I would be careful of continuation in the direction of the trend, which is lower. Okay, so what I would really watch is these lows. We didn't break that 3,855, but I think we're so close to it. I would be very mindful that that could take place. Nasdaq was a little bit stronger, even though it was also down on the day. The main thing to watch here is, of course, last week's low, and then there's also this virgin point of control hanging out down here as well. All right, but we're pretty far at this point below the 20-day moving average. I wouldn't be surprised if we bounce. I heard, I know from like a gamma perspective, I think that it could be in the cards that we have a bounce tomorrow, but I think if that happens, it's probably something to sell into because the trend is lower like this. All right, so that's the Nasdaq. I was referring to let me give a little bit more context behind the rolling bear market. Sure, when we look at Apple, right? Apple took out the lows, right? And I know, like, some people are saying, oh, well, the market generals are the last to go. Let me break it to you. Unfortunately, these are not the market generals. The market general is the energy stocks, right? I think some people have a tough time coming to grips with this, but the Google, the Amazon, the Netflix, right? The FANG stocks, they are not your market leaders, right? They are not the market generals either. They've been hurting now for a long time. They lost leadership last year, in my opinion, towards the end of last year. So that's months ago where they were the market generals. Now, one thing is that you could argue is that, well, they are the biggest weights in the indices, so they are still have leadership in that aspect, that they're still the largest companies, but they have not been exhibiting market leadership for a while. So I don't know, maybe I'll backpedal on that because I'm not even sure what the right definition of market generals is. It doesn't really matter, but I just know that they've not been exhibiting market leadership for some time. All right, but yes, they look very vulnerable, right? And Google, right? We talked about Google at the end of last week and in the weekend video. This is breaking value. Now, again, the days or the week, we're on a weekly bar. The week is not over, but I would watch this 2259. That is not a good look right now in Google, right? If we break this, we could have a long way to fall. Now, let me put a positive spin on this, right? Maybe 2076 is the next level. The positive spin is, if you're sitting waiting on the sidelines being patient, right? You're doing it, first of all, you're doing a hell of a job. And number two, you might really get you might get very good prices when the dust settles for some of these names. Now, I do like Google, right? I think Google is a good company. But I would be more excited about it if we break and we go down, another couple hundred points in Google. That's just what it is right now, right? That's the environment that we're in right now. A couple other things I just wanted to mention, right? And here's Apple, by the way, which we also talked about. I sent out a chart about a week ago on Apple saying it was breaking into the value area, right? So the 80% rule is now active, right? Which means that there's an 80% chance that we go to the bottom of value, and that's about 120. Right, so that would also be an interesting level. And again, would that be the end of the world? No. We've already had a bigger decline so far than another $17 down to get that 80% rule. So that's what I see. And if you notice the last couple of days, like this, these stocks have been the weakest out of the bunch. I put together what I thought was an interesting chart, if I can find this. This is the Qs. This is QQEW, which is equally weighted. It takes the same 100 names that are in the NDX, NASDAQ 100, and instead of market cap weighting them, which is what the QQQ is, it's actually equally weighting them. Now, if you take that, put that in the numerator, put the regular Qs in the denominator, you could see that there's some outperformance there with QQEW, which means that the larger names are underperforming in the QQQ. So the FANG names are the ones that are underperforming right now the most, right? And you could see that looking at a 3-year chart, that this is now above the 200-day moving average. By the way, speaking of a decline, just as I talked about earlier in the video, you have a decline, you have a move up, right? And then you have some more basing action. This is more how how a stock or group of stocks bottoms, right? It goes sideways for a while after a decline. Again, my opinion, that's not how everything happens. Sometimes we do get V recoveries, which are fun when those happen too, but that's not usually how it happens. All right, one other, I talked about rates for a bit today. Here, this is bond prices. They did not close on their highs. They did finish positive, so bonds continue to be a must watch. That could also be why high growth has rallied a little bit, because bond prices have rallied a little bit and yields have come down a little bit, right? Which kind of takes that pressure off of high growth. So that could also have something to do with it, along with options expiration. One other macro chart to review, and that's the US dollar. Right, so interesting. This is the first time that the US dollar ETF has broken below the 20-day moving average since, back in here, right, the end of March. So, personally, I would like to see this fall a little bit further. I think that you might see some gold names or some, commodity names, metal names, maybe rally a little bit, which kind of brings us to maybe one of our last areas to watch. Here's what gold looks like. Again, you can kind of see the trend change a little bit when you look at the 1-hour chart. Gold got into the value area for the day, or for the week, because we're on the 1-hour chart. And I would watch 1832. I'm not in love with this chart, but at least for in the short term, maybe you could see a bounce up to 1866. I traded, one of the first things I traded today was Newmont. Kind of stalled out there in the later of the day, just as a lot of stocks basically did. But you got to move. And what's interesting about this Newmont chart, let's start with the weekly chart in Newmont. Right, so hit all the way 88.37. Got hit pretty hard, big correction here. So there is some support 61, and it didn't get all the way down there. And it found support at a little bit above the 200-day moving average. So I like this for a trade. Again, maybe it just moves up to the 20-day moving average. For now, I'm in some Newmont. Not a huge position for me, because I would never take a big position in a gold miner. They're just too difficult, but I gave this one a shot. Also, metals and mining. This one kind of failed here for the day, but I would watch 51.91. Again, let's do the same exercise for the metals and mining, which have, not just gold miners, but all kinds of miners, steel names in here as well. This actually, remember, this was a really nice looking break higher. Nasty looking bearish engulfing, but now we're kind of from where this thing topped out at 66, we're in here at 51, and this is a logical place for a bounce. Do we, is it 100% that we get a further bounce here? No, it's not. So I'm watching 50, round up here and say 52. I'm looking for a breakout of the value area for maybe another group to maybe participate. I wouldn't say lead in this market. I would say participate. Here's the rest of my trades. Some good, some bad today. It's very difficult. The price action is so whippy. Things move so quickly. I got stopped out. One trade that's staring me in the face is the ALB. I got stopped out in that trade for too big of a loss, but had a couple of good trades too. CrowdStrike, made a little bit of money on that one. All of the cyber names started to rally a little bit. Many of them stalled, but some of them did okay. Should be an interesting day tomorrow with if Palo Alto holds the gains. Easier said than done. Very, very interesting. I actually, the way that things have been moving to the short side, to the downside, I tried a put trade for earnings, put spread, which that I have lost out on that trade. But because this broke into value, let's see where it closes at the end of by the end of tomorrow. 481 is the major level to watch. And it's interesting that it's kind of sitting right there. It's at 483. Top of value for the week is 491, but I wouldn't worry about that too much. I would more worry about the 481. So we'll see how that factors into tomorrow. All right, guys, that's it for today. Just main message is it's a very, very choppy, fast market. So, trying to basically, I say this in a lot of these end of day videos, but, try to keep your sanity with this market. It's not easy to trade, especially like if you're trying to play some bounces on the long side. Sometimes as soon as you see something move, like on a 5-minute bar, it will move and then it will stop for the day. So it's bear market price action. You see 1 or 2 green 5-minute bars and there's no follow through. So that just is a challenging market to trade. Keep your sanity. Try not to get too involved. Try to keep your position sizes a little bit lighter than normal. With the VIX still hanging around. Where did the VIX close for today? I lost my screen with the VIX on it, right around 30 again. So again, still indicating that the market is moving very, very fast. All right, guys, have a great night. See you tomorrow.